Tomorrow is a massive day for the markets because NFP tomorrow might be one of the most heavily anticipated NFP reports that I've ever experienced in my trading career, and for many of you, probably the same. Let's jump into getting ready for NFP, some ideas that I have, some hot ideas, some hot setups that I'm looking at right now that could really bubble over into some really interesting moves, depending on what we get with the data tomorrow. Let's jump in. So for tomorrow's non-farm employment change numbers, we are expecting 164,000 jobs to be added to the US economy. And if this number comes in lighter or higher than that number, it has some massive potential that it could do to the markets. And some of you might be having flashbacks from last month's NFP, which was this candle right here, which caused a huge sell-off both on Friday and the following Monday in the financial markets, especially over in Japan. Look at the reaction to this. So this was the day that NFP report came out really poor for the US. And you can see that on that day, the Japanese stock market was down 5.3% and proceeded to at one point get down another, to 16.5% so quickly. And you might be wondering, why does Japan's stock market move on US economic data so hard? Well, the reason for that is because the markets are very well connected. Whether you trade currencies, commodities, indices, stocks, whatever, they all are kind of like one big grid system. And what happens in one definitely impacts another. And so with the US economic data sliding last time around, investors got very nervous that people would kind of start to deleverage by buying the Japanese yen back on their borrow. Now, that sounded probably foreign language to some of the new traders out there, so I won't go too far into that. You can look up the carry trade if you'd like. I have a video on YouTube. You can search up carry trade, Trader Nick, and you can watch it there if you want to understand that more comprehensively. But what I want to point out here is that the Japanese yen, which has been kind of really strong recently. Now, don't mind this chart going down. This is the dollar against the Japanese yen. The Japanese yen has actually moved higher quite a bit. Take a look at the JXY. Here's the Japanese currency index, Japanese yen currency index. And you can see it's been moving higher here and really trending to the upside recently. Now, the reason I bring all of this up in reference to what could happen tomorrow is that if you get another poor jobs data point, we could see a repeat function of last month's poor NFP data. So I want to talk about the negative NFP implications. Like if we get, let's just say, an NFP report that is bad or good, how do we set up for that? Or what does that do to the charts? I'll show you my best guess. So I've got the EdgeFinder's NFP report page, and what we can see here is if we zoom in over here on this latest data point, we had the last NFP report miss expectations. This red dot here, that was the forecast. And then we had the actual data come out at 114,000. So look at the forecast, look at the actual. It was a big miss. And we're going to get into some misses that we've been seeing this week in just a second. But what I want you to recognize is that this big miss last time caused a lot of fear in the markets. And if we see a repeat function, meaning let's say we're expecting, I think, 165,000 jobs to be added. So the expectation is like right here. Let's just say we get lower than that again. It's possible that the fear comes running back into this market and that perhaps this rally that we've had throughout August could be faded a little bit. So I want to talk about what that means. Let's talk about NFP on a negative front first. Then we'll talk about the positive. Okay, so this one is an easy one for me. If NFP comes in very poor, if NFP comes in very bad for the US jobs data, it's probably fair to say that gold would likely have a big push higher. Now, this is an if. Please understand that when I say if the economic data, the labor data tomorrow comes in bad, then gold likely rips to new highs. That's an if because it could also go the other way. We could have good jobs data, which we'll talk about in just a moment. But what else? If NFP comes in bad, what else does that do? It probably causes the dollar index to slide and perhaps even retest its lows around 100.50. That would not be surprising at all. If you get like a big miss on NFP again, remember last NFP report, we can go right here to Friday, August 2nd, big slide on the dollar index and follow through on the next Monday, if we saw a repeat idea, that could very well put us easily back towards the lows or perhaps beyond if we get disappointing figures. So the dollar index to me looks like it's kind of on the edge of a cliff, but again, we don't know what NFP numbers are going to come out to be. They could come out very strong, but here's a signal that I'm looking at on the dollar. If you're watching the dollar index and we close decisively below that low, then this definitely looks very bearish to me, and I would not be surprised from there if we saw continued downside. Now, of course, none of this is financial advice, and the reason I paused to say that is because I'm sharing my opinions here on this YouTube channel as I have for years. I'm sometimes right, I'm sometimes wrong, and the point is none of us know exactly what's going to happen in the financial markets. Nobody does. There's no guarantees, there's no certainties. So as a trader, what can you do? Well, you can say scenarios like I just did. Let's just say, for an example, that you get a very strong move lower. What would that mean for some setups on my charts? Well, I already mentioned that I'm already long gold, but I could potentially add to my position if we get a big breakthrough tomorrow on weak NFP data. In that case, if we get a big solid green candle for the gold market, I'd be looking for possible add-ons to my trade, meaning adding more size to my trade, which admittedly is actually very small. My GLD trade is not very big. You can see here is my long position on GLD. I'm up $780, which I know is a good bit of money, but on my account, this is a very small position. And I am looking to potentially add. So if we get really weak jobs data, I am going to look to add to my gold long position. And that's a straight up setup for me tomorrow. If we get very strong jobs data points, by the way, let's say jobs come in very strong, for gold specifically, what that would mean is I'm going to stay in the trade. I could see this thing come all the way back down. If it takes out the lows, I will stop out. It is possible that that could happen to me. My style of trading, I'm looking for a higher high and a higher low in order to start trailing my stop loss further on this market. So that's where I'm at with gold. That's my personal approach to NFP. I'm trying to hold on loosely to this upward trend, and we'll see if it can take out the highs tomorrow on weak data. But if we get strong data, again, I kind of just sit in this trade, which has been consolidating for several days anyways, and just see if it wants to keep me in or if it can, find its way back to the highs, etc. Now, I also want to address my game plan on the S&P 500. I'm taking a risk here in a weird kind of way. So many of you might have known that I took a lot of long, a very good sized long position, and end up closing just about $30,000 in profits on this S&P 500 trade. It was one of my best trades this year. My best trade still hasn't been beat this year, which was the gold long, which I made like $40 or something thousand, which was a crazy move. And my SPY trade that I took this recent dip paid very well. However, I stopped out. I trailed out of my trade and took profits because we broke through support here, and I'm taking a bit of a risk. So let me explain what I mean by that. If jobs data comes in weak tomorrow, the risk will have paid off. Basically, by getting cash heavy in my account because I trade on a stock brokerage, if the market drops further, I'll feel really smart about my decision to trail out of my trade. But there's a risk here. I trailed out of my trade, and what if the market just rips higher without me? I'll feel a little frustrated, I'll be completely honest with you. But it's kind of also something where I'm like, I feel like it's worth the risk is worth the potential reward. In a weird way, there's no money at risk, and yet there's still risk and reward here, because you got to think about it. If the market drops and I'm just in cash, I will be much better off than had I been fully positioned and give back a lot more of my profits, right? So I closed out. I realized those gains. So if this market rips higher, I'll feel kind of silly about it, but I'm kind of open to that possibility, right? I'd rather go into this NFP report with some of the weak data that came out this week, which I'll show you in just a moment. I'd rather go into the NFP cash heavy and on the sidelines, even if that means missing out on a potential, sharp rally on the NFP number, because I'm a bit cautious about a couple of things on the indices right now. So setups for the indices, what if we get NFP very strong? So I talked about what I would do if NFP report came out very weak. Well, if NFP numbers come in very, very strong, I'll tell you, I'm probably going to look to get long indices again. And the one that I'm specifically looking at this time around is the Dow Jones Industrial Average, which has the highest score on the EdgeFinder. And I just want to mention before I move on with this video that if you're somebody who watches me regularly, there's never been a better time to get access to the EdgeFinder. It is currently 35% off. It is a one-time fee to get access. And I'm going to leave a link at the very top of the description. If you're a regular viewer, you've made it 11 and a half minutes into this video with me or whatever, I really appreciate you supporting my channel, and I want you to get access to the same tools that I use every day. If you're someone aspiring to be a fundamental trader, this is the tool. This is the one to get access to everything you want in one place. You can look at seasonality data, economic statistics like GDP numbers, NFP, CPI, all that good stuff. You can also look at the commitment of traders data. So real quick, take a pause in this video. Please chat with a member of our team if you have any interest in getting access for that 35% off discount, because it ends tomorrow. We extended a few days for people who wanted to get it, and NFP is a great time to have access to tools and data, so you're not trading blind and just staring at charts all day and not sure why movements are happening. The purpose of the EdgeFinder is to help make fundamentals more approachable to people who know they are important but don't quite know how to incorporate them into their trading strategy. So something to consider, get that 35% off discount. I want to show you something here. So the EdgeFinder, part of the reason that I got out of my indices positions was because I trailed stops got hit on the technical front, that was it. But on the EdgeFinder, if we take a look at the indices, this is where things got a little bit wishy-washy. If we take a look at the indices, the SPX 500 is getting a -3, so we shot down into the neutral territory. NASDAQ is flat on 0 score, so very neutral, and the Dow Jones has a +3. So this is why I mentioned the Dow is the biggest candidate here for me, because let's say that NFP tomorrow comes in very good and employment change, NFP, and unemployment rate percentage both look optimistic, then this could swing the Dow Jones score by a factor of 4, because we could go from -1 potentially in these camps currently, or in these categories currently, all the way up from a -2 collective to a +2, which would be a factor of 4. So that could put us very confidently in the bullish camp again. So I'll tell you what, if tomorrow happens and we just get rockstar unemployment numbers, I'm probably going to get long the Dow pretty quick. I'll look for a technical setup that makes a lot of sense, and I'll still risk manage appropriately, but this would be the candidate. So setups for me tomorrow, I'm either going to look to add gold add, right? I'm already long, so I'd like to look to add if we get NFP weak, right? So let's do NFP weak and strong, okay? So I'd be looking for longs on gold tomorrow if we get a weak NFP number. I'd also be looking for longs, I haven't mentioned this one, but I talked about it on the live stream, on a few currency pairs like EU, GU, or NZD, USD. I should just put NU, hold on. NU. So those are the NFP weak scenarios. I like all of those charts for possible longs on pullback setups. Okay, what about if things are strong? Probably looking for longs on the Dow, right? So there are, in both scenarios tomorrow, there is a good chance that I'm adding some positions. So although this week has been kind of inactive for me, tomorrow is active heavy. I will be very closely watching what happens with gold, what happens with EU, but most importantly, I'll be watching the labor data. Now, I promised I would take a look at some stats with you guys for this week, and I'm going to do that right now because I want you guys to pay close attention. If you're an aspiring fundamentalist, we need to look at some of this stuff together, because look what we got. Yesterday, JOLTS continued to trend lower. JOLTS missed expectations, sending us into fresh low territory for the last few years. Job openings are declining. This is a little bit sketchy. And these are the reasons, by the way, fundamental reasons. EdgeFinder has us cautious on the indices. That's why I took profits on a lot of stuff. JOLTS data came out poor. All right, what about unemployment rate? Unemployment rate, we haven't had fresh data on this, but it's been rising, so we need to be careful here. We're up to 4.3%. Tomorrow is the big day on this front. All right, let's keep going. Unemployment claims. Claims came in today, and they came in pretty much just around expectations. So not a huge hit or miss here, just about flat. But then, I don't know if this data is in the EdgeFinder yet. It might not be. Oh, it is. Yes, look at this. This is what makes me nervous going into NFP. Now, there's not a perfect correlation between ADP and NFP. In fact, it's been pretty off in recent years. but it's definitely not a good thing. ADP, which is primarily the private sector here, coming in with very weak labor data statistics. This makes me really nervous, guys. We take a look, again, if we could zoom in on this on the edit, check this out. So the forecast was 144,000 jobs. By the way, that 144 needs a K at the end of that, but we'll get that added. But anyways, 99K was what actually came out this morning. Not good. No bueno, right? So the point here is that you've got data coming in soft ahead of NFP. I feel most comfortable right now, and I don't usually make my decisions on being cash heavy or not. Like news data doesn't tell me to close positions or not. Like I hold through news very frequently, but I'm feeling very okay with being cash heavy going into NFP because of how much potential energy is in this day's movement, right? We could get some very violent movements tomorrow. That's why I mentioned at the top of this video that this is probably one of the most important NFP reports that I've seen in a long time. Fed's expected to cut rates in a few weeks. What kind of rate cuts are they going to be? Are they going to be saving the day rate cuts because the economy's fallen out? Or are they going to be, things are fine, we're just going to start to reduce our restriction? Two very different rate cuts, things that I'm watching each and every day on this channel. I want to ask if you enjoyed this commentary to please hit the thumbs up button and subscribe on your way out of the video. But before you do, stick around for a second. Check this out. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.